Okay. Assalamualaikum warahmatullahi wabarakatuh. Chapter 10. I hope everyone can hear. So this double entry accounting, this is the outline. So balance of payments is a record of the economic transaction between the residents of one country and the rest of the world. Records are kept annually or quarterly, and international transaction is an exchange of goods, services, or assets between residents of one country and those of another. Residents include businesses, individuals, government agencies, and okay, I cannot see it's hidden there. So example of credits. So double accounting, we have credits and debits. Credits are the ones that we receive, debit the ones that is we give out, going out. So credits: merchandise export, transportation and travel, income received from investment, gifts received from foreign residents, and aid received from foreign governments, and investment by US in the US. This example is in United States, the book, by overseas resident, or in this case investment by foreign residents in Malaysia, in this case. So example, if Malaysia's case, debits: merchandise imports, transportation and travel expenditure in travel overseas, income paid on investment to foreigners, gifts to foreign residents, aid given by the US government to overseas, and overseas investment by US residents, because money flowing out. So current account, the most important inside the level of payments is current account. The monetary value of international flows associated with transaction in goods and services, income flows, and unilateral transfers. Merchandise trade balance includes all goods, US export and imports, export minus imports, that gives merchandise trade balance. When a balance is negative, meaning trade deficit. When balance is positive, trade surplus. Trade surplus means that export is more than imports. So to calculate goods and services balance, add services to the merchandise trade balance. When balance is a surplus, is a positive, it's a surplus of goods and services transaction. When balance is negative, it's deficit of goods and services. And goods and services balance is part of the national accounting. I don't know how to move this away from me, because it is hiding what I'm trying to look at the bottom of this slide. I have this bar of this, Teams bar, where there's a mute and mute right on the slides. I don't know how to move that away to the side, so I always cannot read. So balance of payments, this is an example of international payments outside. I mean, if this US importer of a TV from Korea, so from the US perspective, US importer will withdraw $300 from her account in the US bank, and that importer deposits $300 in account. No, not yet. So there's a check. So check of 210,000 won goes to the exporter. TV goes to the importer. So that check, deposits of 210 won in his account in the Korean bank in Korea, and then So that's what happened. If, on the other hand, if there is a, really I cannot read. Can someone tell me how to move this away? What I'm trying to say that this is the slide. There's a bar of the option for themes. To stop the themes, everything right at the bottom of the slide, hiding what I'm trying to read. So I cannot read it. And I don't know how to move that taskbar of themes. How to do it? Yeah. Okay, that's not important. I cannot read it. So capital and financial account. So next is transaction includes all international purchases and or sales of assets, including private sector and central bank transaction. Assets broadly defined to include titles to real estate, corporate stock and bonds, government securities, and ordinary commercial bank deposits. Major types of capital transfers are debt forgiveness and migrants, goods and financial assets accompanying them as they leave or enter the country, acquisition of and disposal of non-financial assets include sale and purchase of rights to natural resources, patents, copyrights and trademarks. I'm going to go over with my own explanation after this. Private sector transaction. Vast majority of transactions in capital and financial account come from private financial transactions include direct investment. Residents of one country acquire controlling interest in business in another country, or securities. Private sector purchases of debt issued by government or private companies, loans overseas, and I cannot read down there, it's hidden. Capital and financial transaction recorded in balance of payment statement by applying positive digits. Credit to capital, financial inflows, or negative signing, debit to capital. So financial inflow, which is the money coming in, which is credit entry. So if someone is investing in Malaysia, that's a credit entry. So might occur when, number one, US liabilities to foreigners rise, which French resident purchases securities of IBM, for example. Number two, US claims on foreigners decrease. Citibank received repayments of loan to Mexican firms. Number three, foreign held assets in the United States rises. Toyota builds plants in the United States. I cannot move this. It's hidden. Assets, I cannot read. All this thing is hiding the slide. If someone can tell me how to move this. Coca-Cola sell Japanese bottling plant, I cannot read after that. So, official statement, settlement transactions, not statements, movement of financial assets among financial holders such as US Fed and Bank of England. So official reserve assets, United States government assets, liabilities to foreign agencies. So official holdings of reserves used for two purposes: to provide a country sufficient international liquidity, to finance short-term trade deficit, current currency crisis, etc. Central banks sometimes buy or sell official assets in the private sector to stabilize the exchange rates. So official reserve assets, stored of gold reserves held by United States government. These are the components what I'm reading now. I'm going to go over my own words to explain to you where it is. Convertible currencies, this is the reserve, the central bank reserves. Currencies such as Japanese yen, readily acceptable payments of international transaction. I cannot read this hidden. So this is securities. And next is special dwelling rights, new reserves asset created by the IMF as a supplement to the existing reserves of member countries can be transferred among nations in settlement of balance of payment deficits and stabilization of exchange rate. It's basket of currencies that include United States dollar, Japanese yen, UK pound, and euro of the EU. And then the discrepancy and the error and omission, data collection, and so on. So there's a plus and minus error. So when statisticians sum the credit and debits rarely match, since debits must equal credits, residual is inserted as error and omission. And now, perhaps I can explain to you from here. This if you look at on the very left column, this is the current account. The whole table here is about current account on the very right. And there should be other tables. If you are to include all this, discrepancy and so on, this is to get the overall balance. The first part, which is the current account balance. And after that, more columns will give you to the very right the overall balance. But the first one is current account balance. So this current account balance, it is before that one, okay? Goods and services plus transfer. So let's go back to that. I'll explain that to you here. This is current account balance. So what I was trying to say is that all this omission, error will come somewhere on the right before the last column, which is overall balance. So overall balance, next to it is omission. Next to it is a reserve. This is we're talking about reserve. Reserve can be either special dwelling rights, which is the currency of the IMF, which is a basket of currencies of the main contributor of IMF. The large advanced countries, United States, yen, UK pound. And next is the reserve. Settlement, private financial transaction. This is the capital account, private sector, and so capital account will be on the right. Then all this omission and so let's go. Yeah. So you have to understand this. Balance of payments, what you see now is the first part. Now, current account balance. After current account balance, you have to balance with the financial and capital account balance. And then omission, and then the overall balance. That overall balance will have an impact on the reserve and so on. So overall balance always must be always balanced. That's the concept of double entry. Double entry to ensure is always balanced, debit and credit. So overall balance must always be balanced. equals balance. So what happened? All in between will be having, some will be positive, some will be negative, but overall the balance is balanced. It's the same, debit and credit. So the first part is now current account balance. This is the most important part of the balance of payments. You got to understand. You have to understand balance of payments. Inside balance of payments is the first part is current account balance. Now, what is current account balance? It's got to do with basically three things, which is merchandise balance. This is merchandise balance, which is on the left. If you want to make a column, export and import. So if you want to make a column, export and imports, will give you this one, merchandise trade balance. So let me repeat. On the left, if you want to make, yes, there is entry for that in the current account balance. Export how much? Import how much? So export minus import will give you this merchandise trade balance. That's number one. Number two, export and import of services. Export of services, import of services will give you service balance. That's number two. And all together, merchandise and services balance. The import and export of merchandise, or the two here, these are goods and services balance. That's, if you want to look at in general, that's the first part of current account balance. Which is the balance of trade of both goods, which is merchandise, and services. This is the first part. Balance of trade of goods and services. You can, go into detail, branch into two, goods and services, but this altogether, goods and services only. So this one, income receipt compared with payments, the incomes that you get from outside of the country, incomes. This case, for example, countries that send workers to other country, they send back money. Yeah, here. For example, how much, the wages and salaries paid to workers from other country, compared with coming into Malaysia. So receipt minus payment outside. So this is the balance. And then, so next is transfer. Transfer is not a transaction. Transfer is not selling, and it's not selling. Here, merchandise trade, you sell merchandise, you export. Here, services, you sell, you export services. Like when you come to services, doesn't mean that the services go flying there. People from outside of Malaysia coming as tourists, having a holiday here, that's income in terms of services. Compared with minus Malaysians going outside, holidays outside. It's not that, that services is flying, you go there and get the vacation and holidays in winter in Korea, in Japan. Now you go skiing in Korea, you go skiing in Switzerland, you pay money. There's services. The ski, doesn't come here. You have to go there. Unlike this merchandise. But it is already considered as services, and that goes into the current account balance. So compared with this one, transfer, it is only a transfer. I'm just giving a definition, okay? Transfer is not a transaction. It's not jual beli in Malay, selling and buying and selling. No, transfer is just you transfer. For example, either from the government or from the people individually or from the group of NGOs, there is a earthquake somewhere. So you send money. Either the government or NGOs send money to that country to help the people there because of earthquake or typhoon. So that is transfer. So altogether will give you current account balance. So you got it now? So basically, current account balance has one part here, the major parts, which is balance of goods and services. You can go into detail, goods only, services and so, but here, one main item number one, balance of goods and services, trade, good and services trade. Number two, income received from outside the country minus income paid. That income, this is a minus, receipt minus the payment outside. And then unilateral balance, the same, receipt minus sending outside. So this is current account balance, the most important part of the balance of payments. So because current account balance, if you have a very, very large deficit, that will affect your position, that country's position, because current account balance will be balanced out by the other one, capital and financial account balance. This one. Yes. Deficit in a current account must be balanced by the surplus in the capital financial account, and then the overall balance will be balanced. But that financial capital account, how to make it surplus? Money coming in from what? From loan coming in. So that will balance it out. So meaning that if you have large negatives or deficit in current account balance, on the other side, financial, this current account, okay, the other part is financial and capital account. Before the whole thing overall balance, you have to balance that with the loans. So that's why it is very important to manage here the goods and services trade balance, or I say it the other way, the trade in goods, which is merchandise, goods, merchandise, goods, same, goods, merchandise, goods, same. The trade of import, export, and of merchandise, and also import and export of services, this must be very important in order to have this good current account balance. Because transfer is not that much of a factor in a country like Malaysia, a country maybe a less developed country, yes, transfer can be a big factor, you know, but not for Malaysia. So trade, for Malaysia, services, yes, tourism is big, but comparatively more important is export of goods and services, merchandise trade balance. This is the most important part. So now you understand where that is. Time is it? 1:34. Yeah, okay, we're there. So continue. Taken as a whole, US international transactions always balanced. Always balanced, because that balance will come from either FDI or you know, the investment of you know, the government bonds. Here, look at this, selected, or securities, US securities, or loans. So there's discrepancy, last item before the overall balance, which is not shown here. If I can wait a minute. I will try to go to the example of laporan ekonomi. Not responding. The real example. Can you see this now? A table, imbangan pembayaran. Can someone tell me? Can you see this?
Yes, sir.
Okay, yeah. Now it's easier to. This is the real data from laporan ekonomi Malaysia. So this is D is account semasa, current account. This is the most important. Current account. So what it is in current account is the goods and services, export and imports of goods, barangan, and export of, this is the net, okay, of services, just pengangkutan, transportation, you know, it's always negative. This is data 2007, 2008, 2009, 2010, 11. until today is always negative. For Malaysia, paying for the transportation, shipping, to export goods, still negative, because shipping, and this is travel, this is tourism. I mean, tourist is here, tourism is here, perjalanan, travel. Tourism is a big part of the Malaysian economy, so it's positive. And other services, and this, and the income that we just mentioned just now, always negative. I mean, you know, income is going outside, you pay for to the foreigners. And transfer, you know, I mentioned transfer, you send money to earthquake country, you send money to help, you know. So transfer, when I was telling you, transfer is not a transaction, it's just transfer. So the whole thing here is the current account. This current account must be balanced by the capital and financial account, must be balanced with this, and this here, error and omission. To do what? To get what? This overall balance. Basically, this overall balance, and then this overall balance will be reflected, if positive and negative, will be reflected by the central bank's reserve. That central bank reserve can be in dollar, can be SDR, can be in yen, whatever. So look at this. It's just opposite of it. Imbangan keseluruhan minus, this reserve must be positive. This is perubahan bersih dalam reserve luar negara Bank Negara Malaysia. Bertambah sebaliknya. Minus is bertambah. Jika berkurang is plus. This is plus berkurang, because you have to pay for this overall balance, which is minus. So you have to use your reserve, Bank Negara reserve. So plus is a berkurang, the reserve berkurang. The reserve berkurang means your reserve is in dollar, US dollar. You selling your dollar in the financial market, you sell your dollar, and you pay that with your ringgit. Or you releasing your dollar, the reserve, you purchase your ringgit Malaysia, in the case of Malaysia. So that's why the reserve of, say, US dollar has decreased, berkurang when it's positive. This here, overall balance is positive, so you will have an increase in the reserve of the central bank, because minus in the opposite. Okay, minus is increase, minus bertambah, increase, bertambah will be negative sign. Okay. So the most important you gotta understand is that imbangan pembayaran is here, very important. Which part is the most important inside the imbangan pembayaran? I mean, account semasa. Which imbangan pembayaran is imbangan pembayaran. The whole thing is imbangan pembayaran. Sometimes, you know, when I say something, I don't mean to say what comes out. It's not synchronized. Okay, this is imbangan pembayaran. Inside that imbangan pembayaran or balance of payments, the most important is current account. Okay, current account. This is current account. Inside current account, the most important is merchandise. You cannot do much about the services. Of course, you can promote your tourism, you know, transfer. You become stingy, kedekut, don't send money to help other countries. No. So forget about that. here is the most important, that you gotta have a good surplus, lots of exports compared with imports. I mean, you have got a good surplus, trade surplus, in order to have a balance in the current account, because imbalance in the current accounts will have to be balanced by all this: pindahan modal, aset bukan kewangan, akaun modal, or pelaburan asing, or pelaburan portfolio, or pelaburan lain must come in. This negative here must be supported by money coming in this. But money coming in this, you have to pay back pelaburan. You have to pay back, the dividend. Also portfolio, you have to pay back the dividend, and also and modal. The modal, or the capital transfer, and so on. Okay, time 45. So I have to go back. Stop sharing. Okay. Share again. Browse. Okay. Now you understand. This is a part of the financial account, okay? And this is the current account. Taken as a whole, United States international transaction always balance. Any force causing increase or decrease in one balance of payments account leads to exactly offsetting changes in balance of other accounts. Okay, in table 10.2, with table 10.2. Okay, this one. US had a deficit of minus 481 billion in 2016. Offsetting this deficit was a combined surplus of, I cannot read, remaining capital and financial account. Okay, that's what I was saying. This current accounts balance minus 481 must be balanced by the financial and capital account. Yes, obviously here offsetting this deficit, that one just now, in the current account balance, current account. Okay, this deficit was a combined surplus of. Offsetting this deficit would be a combined surplus of the, I cannot read, it's hidden, remaining capital and financial account. I cannot read. So, a net foreign investment and current account balance. Current account balance synonymous with net foreign investment. Synonymous, not exact, not the same. It's the opposite of it. One thing is minus here must be balanced by the other one. That's why we call it synonymous. So current account balance means, or synonymous with, net foreign investment in national income. Current account balance seolah-olah, bukan seolah-olah, it means that net foreign investment, that's net foreign investment in national account income accounting. So current account surplus means an excess of export over imports, of course, the major part of it, and nation becomes a lender to the rest of the world. That's why let me go back here. This is the most important: trade of merchandise and trade in goods or merchandise, trade in services. So current surplus, if you want to go even more, in terms of the more important ones, is the trade in goods, merchandise trades. Let's read here. Current account surplus means excess of export over imports. Yeah. Excess of export of goods and also excess of export of total, which is goods and services. Total export, which is export of goods, merchandise, same thing, okay? Do not get confused. Goods, merchandise, this is merchandise. Goods, merchandise, same thing. Okay? So, current account surplus means excess of export of goods and services over imports of goods and services. Nation becomes lender to the rest of the world. Current account deficit, on the other hand, means an excess of imports, more imports of goods and services over export of goods and services. So the nation becomes a borrower from the rest of the world. I cannot read down there. Hidden to me, current account. Oh, please forgive me, I cannot read. It's hiding from that bar. So impact of financial of capital flows on the current account. Capital and financial flows can initiate changes in the current account. What about capital? So capital and financial flows, which is the second part, current account first, and then financial and capital account second, before the overall balance. Go back to the Malaysian table just now. So capital and financial flows can initiate changes in the current account. Yes, this is what we're going to learn throughout. It's going to be until chapter 15. Capital and financial flows can initiate, in the first part, initiate changes in the current account. How? We're going to learn. So, by the work of interest rate. Okay? So, I was just answering myself just now quickly. So, in 1980s, massive financial inflow into the United States in 1980s caused current account deficit for the United States. Flows, a lot of financial inflows coming, that will create deficit, current account deficit. Why? Imports more money. You have a lot of money, you import more. So remember, current account, which one is the most important factor? Trade in goods or services also. Yeah, more money you go, melancong in Malay, melancong, holiday, spend holiday overseas, or you import lots of goods because you have a lot of money. So, where is it? Yeah, financial inflows caused current account deficit for the United States, resulted from an increase in U.S. interest rates. Just U.S. interest rate relative to the interest rate abroad. When the United States, that's what I said just now. Already I gave the answer. Interest rate. When interest rate is high, money will be coming. Remember, money will go to wherever interest rate is high. That's where money or capital going. Where is capital going? Let me repeat. Wherever the interest rate is high, because the return is high. So higher interest rate caused by growing budget deficit. Higher interest rate caused by growing budget deficit. Yes, yeah, to borrow more because budget deficit, and decline in private savings. I cannot read that. Current account deficit. Yeah. Current account deficit may be driven by capital flows. Capital inflows keep dollar strong than it otherwise when the dollar is strong. So when the dollar is strong, you import more. because cheaper for you to import. I cannot read. I'm just hidden to me. I'm just saying what, because I cannot read out there. So when foreigners start purchasing more of our United States asset than we are purchasing of theirs, the dollar becomes more costly in the foreign exchange market. So US goods more expensive to foreigners and will decline of export. So foreign goods becomes cheaper to the Americans, so increase in import. So I cannot read. Relative high. Wow. I'm sorry, I cannot read. Hidden from me. So is Trump's trade doctrine misguided? President Trump wants to revise the NAFTA, North American Free Trade Area, the three countries, United States, Canada, and Mexico, to reduce America's trade deficit with Canada and Mexico. Bilateral deficit matters little for the country's aggregate trade balance. America's import would move from Mexico to other countries as production reliable products. So America's export will move other countries, so negligible net effect. So this is cause for. Is current account deficit a problem? Current account deficit arises because of domestic economy spends more than it produces. Excess of demand met by net inflow of foreign goods and services and leading to deficit problem? Not necessarily. Just like loan. If you have a loan, is that a problem? No. You want to buy a car. Yes, you must take a loan. So, current account deficit is not necessarily a problem. But it becomes a problem when it is out of control, too large to handle. So, foreign capital inflows augment domestic capital sources and keep domestic interest rate lower than otherwise be. So, that benefit of deficit is ability to spend more. And when you spend more, there's going to be the multiplier effect of the economy. I cannot read. So, is it good or bad for a country to incur debt? Depends on whether deficit used to finance more of consumption or investment. If the debt you borrowing to spend, lavishly to spend for consumption, yes, that's a problem. But if you borrow for investment, not a problem. So if you use budget slide, burden slide. So for consumption, no boost for future productivity, and to meet that business, future consumption will reduce. So cannot read. 4 more minutes. Recycle. Rapid growth of production and employment associated with growing trade and current account deficit. Slow output and employment growth associated with surplus. Why? Output is low, you cannot import. Rapid growth, you have money, you import a lot, so will be associated with current account deficit because you import more goods and services. So during the session, saving investment tentu cannot read. I'm sorry. Please read that for me and for yourself. I cannot read. It's hidden from me. So how they has borrowed at a very low cost in the past 4 decades. United States current account moved from small surplus to large deficit financed by borrowing and selling assets. So it has become a net debtor. We say debtor, not debitor. No, in English it's not debitor. No, debtor. Become a large net debtor. So United States is a debtor nation. In the past 2 decades, paradox is that United States residents earn more from foreign investment than foreigners earn. So it's been like debtor without bearing the negative because I cannot read. What accounts for the paradox? Asymmetric investment returns, rate of return advantage nearly 1 to 2%, given political and economic instability in other countries. So as firms take greater risk, investing in foreign firms, higher risk and higher reward. So by contrast, seen as a safe haven, foreign investment are more likely to buy US assets than offer low risk. So future US borrowing may be less favorable. So do current account deficits cost Americans job? US employment statistics do not fit expected pattern of negative relationships between current account deficit and employment. So trade deficit may hurt employment at some firms and industries as workers displaced by import, but for the whole economy, deficit matched by equal inflow of foreign money investing in the United States. So current account deficit produces jobs as a result of higher. I'm sorry, I cannot read that. Hidden. So can you continue to run? Yes. Foreigners have remained willingly to buy US assets. Large increase in the United States current account deficit not possible without inflows of foreign capital. So China is a major supplier of capital in the United States. In the 1980s, it was Japan. That was after the Plaza Accord of 1985 that makes Japanese yen increase in value. But nowadays, currently, China is the. So China central bank has converted dollar holdings that may pay interest. So can you continue? Consequences of current account deficit are growing foreign ownership of capital, and by foreigners in the United States. So segment that summarizes fixed. Okay. This balance of international indebtedness. We have to stop here. Balance of US a destination. You must read that. That's a reading dollar as a currency. Widen trade deficit. Benefits, special donor rights. This is by MF. So that's it. So basically we have done with chapter 10, because the rest of it you can just read. Okay. So now we finish chapter 10. The most important thing you gotta understand is about current account and financial and capital account, and before that the double entry concept. Okay, that's it. So thank you, and I'm gonna stop right here. And I'm gonna give you the QR code